Welcome to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group, bringing you interviews with Colorado's best real estate and mortgage professionals, empowering you to understand the current trends in the housing market so you can make the American dream your reality. Enjoy today's episode.
Well, it's a great day in Colorado, and welcome to the Colorado Real Estate Leaders Podcast. Today, we have with us Randy Kaufman, who's a senior mortgage loan originator and a certified military specialist. Randy, welcome to the program.
Thank you very much.
Hey, so get us started with what got you into the mortgage lending industry. I know that back in the day, a long time ago, I was a mortgage lender back in the early 2000s, and everyone's got their fun story of what got you into the business. So what's your story?
Not much of a story. I kind of got into it by accident, but it was a way for me to be in finance and a way for me to help people. And I've managed about 31 plus years of helping families qualify and get into purchase homes. So it's worked out well for me. And I feel like I'm helping the economy of the United States move along a little bit.
Yeah. I mean, you think about the cliche, the American dream, buying a home is the American dream. And unfortunately, most people don't have hundreds of thousands of dollars sitting around to pay cash for their home. So they need to have a little bit of mortgage help.
Correct.
What kind of programs do you specialize in? I mean, do you work mostly with home buyers? Do you do refinances as well, or is that a good mix?
Yes. No, I do a mix of both. However, right now, with rates being as high as they are, it's more of a buyer/seller's market. There aren't too many refinances, but there are a tremendous amount of people out, or homeowners out there in the United States, that have loans higher than 5%. And those are the people that we still want to talk to on refinances, because there's a lot of equity. People are still taking equity out to pay off bills and student loans and family and such. But mostly now, I would say 80% of the market is purchase a home.
Yeah. Well, and so let's think about some of the special programs that you have. What do you, when you're working with some of your referral partners, I'm sure you work with real estate agents as well. What type of programs are you finding are the most helpful and popular for buying a home?
Right now, the most popular are adjustable rate mortgages, where you can buy a home, and instead of what's considered a traditional 30-year fixed rate loan, maybe you take an adjustable rate where every day for 5 years or 7 years that your payment is a half a point to 3/4 of a point below a 30-year loan. We always ask families how long you think you're going to stay in a home. The national average, believe it or not, is about 6.7 years. And on the West Coast, it's about 6.5 years. And it goes up in the Midwest and then down on the East Coast. So if you have incidents where you're going to only be in a home for 3 to 5 years, you take what's called a 5/1 fix, and that's an adjustable that will adjust after 5 years. And the start rate is 3/4 of a point below a 30-year. I used to do a lot of 7 years. That's about a half a point below a 30-year. And we have a new product called a 15/5, which is fixed for 15 years. And then it will adjust and continue to adjust it, but every 5 years. And that rate right now is about a 1/4 point below a 30-year. So those adjustables give you, the buyer, more buying power, and you qualify for more home.
Yeah, that's a really good point. I like how you laid that out, because way back in the day, back in the crash of 07, 8, 9, 10, 11, 12, or however long that it ended, it was because of those toxic mortgages with the negative amortizing adjustable rates, and nobody really understood them. But all they heard was their lender said, "Here's the payment," and it's like, "Yay, I can afford this massive house for this really low payment." Well, what you're describing is safe and solid, and if the rate stays fixed for 5 to 7 years, and in that last case, 15 years, why wouldn't you take something that is 1/4 to 3/4 below the market rate? Because you're probably going to move in 5 to 7 years anyway. So you're maximizing your payments.
That's exactly right. So more and more articles have come out in the press that adjustable rate loans are being talked about, because rates have gone to 6% on a 30-year fix. So why not stay below that and qualify yet for more home. What you mentioned about the negative amortization, there are no more negative amortization loans. Yep. And balloon mortgages have also gone out of fashion. The government actually regulated those out of fashion.
So I think when we went through that crash, those really crazy loans now are not even available, and for good reason. So let's talk a little bit about your being a certified military specialist. What does that entail? And I would suspect that that's a really nice, rewarding aspect to not only help someone get into a home, but a military veteran.
Yes. For me in Arizona, we have 500,000 active or retired military personnel. Being certified means that I know how to write a VA loan, Veterans Administration loan, and I know how to talk to the veterans, both, again, retired or active, on their financing and how to help them get in a home. A VA loan is pretty simple. It's zero down. There's no down payment necessary. They pay a little bit of a mortgage insurance fee, but and their rates are oftentimes a quarter point to a half a point below a conforming or a regular rate that you and I would get. So there are still ways to help our veterans, and the main point is zero down. There's no down payment needed. And what we have found in America across the country is people can make the monthly payment. It's always the down payment that families have trouble with.
Yeah.
So there are many down payment assistance programs around the country, and if state to state and actually county to county, they can differ. But in the case of the military and the former retired military, they can, all through their lifetime, they can use a VA loan and put zero down. And it's quite popular, as you can imagine.
Yeah. And let's even talk about something that, if I'm remembering correctly, if you use the VA loan to buy the home, the zero down is spectacular, and that's wonderful. But let's just say that in years to come, rates inch down or go down enough to afford a refinance. Isn't there an easier way? And I want to say a VA Streamline. Isn't there an easy refinance? So talk a little bit about that, because now you've got less paperwork, less qualifying, and that makes a nice thing as well.
Yes, there are. I believe there's 4 categories where you don't have to submit your pay stubs, you don't have to have an appraisal, you don't have to have a credit report. Although most lenders will run a credit report to get the mortgage verification part of it, but the credit scores are not taken into consideration. And you're right, the documentation is less, and you can close those generally in 2 to 3 weeks.
Wow.
And that's the fun thing. And yeah, we're going to sit here and we're going to wait for rates to go down, and hopefully we can help that many more people. But yeah, it is a very good product. And again, it's called a Streamline VA loan.
Yeah, that is huge. Okay, so what other benefits are there with being a military specialist, certified military specialist? So, in my opinion, anyone can do a VA loan if your institution allows that. But what is the benefit of being a certified military specialist?
It's just experience. I have over 30 years experience writing VA loans and talking to veterans and helping them. There are things that you learn when you read the VA guidelines. So you read different things from the Veterans Administration that they put out. I was able to help over the years a couple of families with a little known home improvement loan that VA does to help you retrofit your home if you need be. So in the case of the last one was about 4 years ago, and VA brought in a contractor and they put some ramps in the home and put some guardrails that weren't already there. And they will do a loan for you up to $15,000. The new part of VA, the new loan that they have, is a construction loan. Again, not many lenders offer it. And construction loan is a little bit different animal, of course, but it allows the veteran to get in the home without any money down. So those are things that you learn about when you're a certified military specialist.
Yeah, I want to touch on that construction loan because, zero down is huge. But then also having a construction loan, there's a lot more moving parts to that than just here's the house I'm buying, I need a loan, because you've got the builder and you've got maybe to have draws. So how does that work, and what's the benefit of buying a new build?
Construction loans are a little bit more difficult, and I like to say they are not for the new home buyer. But as you said, there are draws. Usually there's 6 to 8, and most lenders will want to approve the builder. So you want to find a builder that's been in business at least 3 years, possibly 5, and has a good reputation in the community. And you have usually on a regular construction loan, we can go up to 90% of the value of the home. And you do have draws, and you have a schedule based on your contract. So you're going to have all the materials written down and priced out. That's called a spec sheet. And you turn that in. That's part of your approval process with the plans for the home. And that's how it is appraised going in. And then once the builder starts, he or she will have a draw, will want to have money for deposits on things like the windows and the wood. And then they submit those into us, and we wire out the money. And like I said, it's not for the faint of heart, and it's not for the first-time home buyer.
Yep. But it's a really unique combination of combining both military special financing with construction lending, because I've not heard of that before. That's really good. So when you have people that come to you, do you what about first-time home buyers? Let's say that they're not military, where you can get zero down. What kind of programs do you have for the first-time home buyer?
First-time home buyers can still put 3% down. That's with a credit score of 720. But 3% down allows them to get in, and it does not have to come from their own money. It can come from their 401k, which I do a lot. It can come from a relative in the form of what we call family gift, where the relative would sign a gift letter. Or it can also be part of your tax refund. When you get money back from the IRS, you put that money away, and that's trackable. Every down payment has to be trackable. In other words, either it has to be in your bank account for 2 months, or a gift letter, or the statements from your 401k. Now, on the 401k, we talk to a lot of people about, using money now versus money when you're 60. And some people take a loan out, or some people just make a withdrawal and pay the early fees that you have withdrawing from a 401k. But there's a tremendous amount of wealth in 401ks in America. And what we find when people reach the age of 40, they just don't know how to qualify for a home. It's not something you learn in school. It's not something your parents sit you down on a Saturday and say, okay, this is how you qualify for a home. This is what you need to do. It's not done that way here. So that's my biggest job, is educating people on where to find the money, how to keep your credit clean, and put that money down for down payment. And this is what you qualify for.
And it sounds like you really do a great job educating people. And one of the big things that I would say is, boy, don't get enamored with that bigger and better house and go to the very upper parts of your qualification. Correct. Because invariably something comes up. Like, oh, the electricity, we know what the payment's going to be. We know our homeowner's insurance is going to be X, our taxes are going to be Y, but wow, we didn't realize that maybe the electricity, or there was an HOA that we didn't fully realize. And now all of a sudden your budget is really constrained. So I think that for younger couples, it's really important to make sure that you make that purchase and can feel comfortable making the payment.
Correct. So what I do as working with a first-time buyer, and it doesn't matter how old they are, I lay that out for them. I give them a budget, because I can only go to 43% of their gross monthly income and use that for their debt. So if they make $100,000 a year, you look at 43%, divide by 12, and whatever that number is, that's how much they can pay for their mortgage payment, their car payment, their credit card bills, and we use the minimum. We don't use what payment they make. Student loan payments, when those come back in after September, and whatever's left is their house payment. And sometimes it's a shock what they can afford, both ways, high and low. And sometimes, I ask them what number do they want, and I show them what their number buys and what my number buys. And usually my number wins. So,
well, your number wins because you're the one writing the check. You're packaging it up to get to the underwriter to approve it.
Yes, but they'll come in and tell me they want a $2,000 house payment, and I'll show them what $2,000 buys, especially now when we have higher interest rates. And then, we'll work backwards, and I'll show them what they qualify for. And if it's $2,500, I'll show them what $2,500 will get them every month. And that's when I say I win, because they'll say, oh, we really can't afford the bigger house or the different house, or maybe the one with the pool versus one without a pool. So yes, I make the rules, so to speak, but this is a team effort.
Yeah.
So I have to obviously listen to them. For
sure. And the worst thing in the world would be to get the couple coming back to you in 6 to 12 months going, we just can't afford this help and the rates have moved. And so giving that good sound advice on the front end, like you do, is so important. And that's just good business. I think that a lot of people these days, they take for granted working with a real estate professional that actually returns phone calls, actually tells them good sound advice. And when you can do that, like what you're laying out, it really just lays the groundwork for a great relationship. So same with your strategic alliance partners. I'm sure you work with builders that would refer to you, or real estate agents. And so having that sound approach is always the best.
Yes. But let's talk about communication for a minute. I work until 9 o'clock at night and all weekend long. So that means that I take calls, texts, emails, and I answer them over the weekend and at night, and I've done this for 31 plus years, because when people are looking for homes, it may not be during business hours. It may be at 6 o'clock at night. It may be 3 o'clock on a Saturday. I did a pre-qualification this past weekend because the gentleman saw a house at 11 o'clock in the morning and thought at 3 o'clock he wanted to buy it. So that's how I work. And that's the type of loan officer you should work with, as the type of realtor you should work with. Somebody who returns calls and emails or texts and is available, say, after dinner or on a Saturday.
Exactly. I love it. That's spectacular. Well, I think we've covered so many great things here of just how to do great business. But Randy, if someone is interested in reaching out and connecting with you, what's the best way that they can learn more?
Phone call or a text at 602-740-6678, or an email at rkaufman, that's Kaufman, at NotreDameFCU.com.
Excellent. Randy, thank you so much for coming on today. It was a real pleasure having you on.
You're welcome. Thank you very much.
Thank you for listening to the Colorado Real Estate Leaders Podcast, brought to you by Trailstone Insurance Group. To learn more about the topics mentioned on today's show, or listen to past episodes, visit www.coloradorealestateleaders.com.